Hey, it's Josh High with Swift Home Mortgage coming to you with your weekly mortgage minutes. Today I wanted to talk about getting mortgage ready. So if you're a realtor, you're working with clients, you got to get them mortgage ready unless they're paying cash, right? If you're a client and you're buying a house for the first time, you need to get mortgage ready. If you are a seller and you're buying your next house, you still need to be mortgage ready. There's a theme here, and we all know that most people don't live their lives like they're trying to qualify for a mortgage. So mortgage guidelines are a little bit weird from time to time. They don't make perfect sense in reality, and we have to do some things that make us jump through hoops, that make us create a lot of need for documentation, over-document, over-explain, all that kind of stuff. So what I wanted to do in this video is just give you some tips to help you prepare. Now, this video is not going to be for the people who are currently buying a home today or want to go put an offer in on a house this weekend. Might be a little bit too late for these tips to apply to you, okay? I'm going to go through 5 of these tips. The first one I'm going to talk about is get your credit right, okay? We can do loans all the way down to a 500 credit score, but they're not easy. Ask anybody that's ever been a part of one. There's a lot of extra qualification, documentation. The box for that qualification is much smaller than when your credit score is higher. You've got a lot more options. So we always want to have the best credit score that we can manage getting into a new loan, okay? So some tips around that are the big ones, the easy ones. You got credit cards, pay those balances down. Get them down to about 1 to 3% of your outstanding credit limit. So if you have a $10,000 credit card, you want to keep about $100 to $300 active on that card. You actually get a little bit more benefit to having a small balance than you do having a zero balance. Okay, so try to manage that. Don't let those credit cards run away on you. Keep them low and keep them down there until you get through your house and you've closed on it and we're done with this whole thing, okay? Now, second, so if you've got a 30-day charge card like an American Express, you run them up for the month and then you pay them off. And it's not a revolving balance. You don't keep a balance on those cards. Get those paid down to zero. Don't have them run up when you get your credit pulled to do a new loan, okay? You get a big benefit by having that 30-day charge card at a zero balance. You're gonna get the maximum impact to your FICO score at that time. Another tip in credit people often overlook is don't go closing old accounts. If you've got a zero balance credit card that you haven't touched in a while, leave it open. It does you no good there to shut those credit cards down because you're losing your depth of credit or the length of time that you've had credit established. So if you've got those old accounts, leave them alone. Pay them down to zero. If you're paying down these charge cards, just pay them off, leave them open, don't close them. You'll see a better benefit. If you've got old stuff out there following you around like an old collection or a missed payment or a medical collection or a student loan collection, something like that, you might want to consider consulting with a credit repair professional now before it's time to really jump in the market and see what you can do. I can promise you now is an easier time to get that credit fixed than when you're in contract and you're scrambling, trying to get everything done with your appraisals, inspections, and movings and contracts and down payments and all that kind of stuff. Take a little bit of preemptive medicine and do that work now before you get to that time. So I got some great people to recommend. If you're interested, let me know. I'd be happy to send you the information. You can get started. Listen to them. They're professionals. Some of it might cost money. It's not all going to be free, but they might be able to get some stuff done without you paying stuff off, or they might advise the best course of action is to maybe pay for delete or settle or something else along those lines. So take their advice, see what you can do to get to your target score, okay? Now, the second major tip, get your money right. What do I mean by that? You want to make sure that you've got the money that you're going to use for this transaction, this loan, this purchase. You want to have it identified, sitting in an account, leave it alone. Don't touch it until it's time to spend that money at closing. Now, what else do I mean by this? If you're the kind of person that has multiple checking accounts and you pull from here and here and you transfer here and you move money here and you're just constantly moving money between 5, 6, 7 different checking accounts, my best advice to save you a lot of headache when you get into this process is consolidate that down into one for the time being. Keep your other accounts open, that's fine, but you should limit all the activity of all those unnecessary transfers and covers and deposits and everything else. Try to minimize your activity at the bank. Let your money come in through your direct deposit or your payroll and then pay your bills. Try to be clean on everything else. The reason for that is when we see these different bank accounts, we're going to be asking for statements out of each one of those bank accounts. And if something pops up in one of those statements, it could require more documentation. It could uncover something that you didn't want to have seen. All kinds of things can happen when we get into the weeds on that and we start looking at stuff that you don't want us to look at, okay? So take my advice, consolidate down to one account, checking, savings, leave it at that, and then go on from there. How else can you get your money right? Well, if you're selling something, you can do a large deposit. What we consider a large deposit is about 50% of your gross paychecks. So if you make $5,000 a month, if you have anything $2,500 and higher, we're gonna call that a large deposit. We wanna source it. Where did it come from? How did you get it? Do you have documentation? Was it paid by check? Do you have a statement? You know, those kind of things. We wanna see where it came from. So if you're selling big ticket items like RVs, motorcycles, ATVs, guns, whatever, Bitcoin, whatever it is that you have that you're trying to liquidate to get into your bank account, try to use a check. Use something that we can see and document and paper trail in order to tie that money up and make sure that you're going to be safe and we can use that money in your transaction. So if you sell a car for $10,000 cash and you don't have a bill of sale, you don't have any proof that you received the money from someone, we can't use that 10 grand in the purchase of your home. So you have to be careful about that. I'm here to help you step through this kind of stuff. So if you have questions about what you can and can't do, even before you've got a loan application, call me, let's talk about it, and I'll make sure you're taking the right steps so you don't trip over yourself in this process. We can thank the anti-money laundering laws and the Patriot Act for a lot of this because we're making sure that this is not terrorist money, this is not drug cartel money, this is not money that's received through illicit means. We want to make sure it's clean, documented, and available. Since the government is involved in all this, we have to make sure it's clean and ready to go. That's the reason behind all of that extra documentation. Now, to tie into that point, if you are depositing a large amount of money, then you can either document it or you can let it sit in your account until we're past our 60-day mark to where we don't care where your money came from. So if you put money in the bank in January of 2023, and here we are in May of 2023, we don't care where it came from because you've owned it for 60 days. That's your money. So if you can think forward and say, hey, you know what? I'm not gonna be able to get a bill of sale for this clapped out RV that doesn't have a title, but I'm still gonna sell it for $10,000. So let me sell it, put my money in the bank, and let it sit there long enough for that money to season and be safe when it comes time to do your loan. So greater than 60 days, we don't care about it. If it's within 60 days, you gotta have that paper trail for us to be able to give you credit for that money. Big tip number 3, don't change jobs. Of course, if you need to change jobs, if you're getting a promotion, it's gonna put you and your family in a better situation, by all means, let's talk about it. Change that job and go and make your money, right? I'm not trying to stop you from getting promoted or advancing in life, but what I'm trying to stop you from doing is going from W-2 salary, weekly, bi-weekly paycheck over to 1099 self-employed independent contractor, doing maybe the same job, but your IRS status changed. You're not W-2 anymore, you're 1099 independent contractor. So that means you just added 2 years to the clock of your pre-approvals time period because we have to see 2 years worth of self-employment, business filings, tax filings, income, and stability of employment over those first 2 years as a new business owner. So be very careful and make sure that W-2 to 1099 isn't going to tank your chances. Another thing to watch out for is if you're heavily commission-based or bonus income or some percentage of profit that comes through as a bonus or extra, that's got to have a history of receipt too. So if you go from a W-2 base salary sales position and then you roll over into a new company and you're 80% commission or even 100% commission, that can delay your plans a year to 2 years. So you want to be very careful about what jobs you're taking on. Base pay to base pay, no problem at all. W-2 to W-2, base pay to base pay, no worries at all. Easy to do, just try to avoid super long job gaps in between the jobs. Couple weeks here and there, not gonna hurt anything at all. Speaking of the IRS, pay your taxes. Get them paid, make sure you're up to date. If you don't pay them, make sure you have your extensions filed and the IRS isn't coming after you for anything. If you have money that you need to pay to the IRS through a payment plan, go ahead and get a couple of those payments on a record to show that you're making those payments. That way, when we get into underwriting, they're going to see that plan is available, you're making those payments, and it's all worked out. That's the biggest thing we look for. We might not even have to get into your tax situation if you're W-2 only and you're not self-employed, you don't have any rental properties or businesses. We might not even need to pull your tax returns, so that might be a moot point. But I'm just saying, all my self-employed friends, make sure those taxes are paid and you're square with Uncle Sam before you get started with this. And finally, understand your buying power. Now, this is a little bit more than just you figuring it out on your own. This is when we step in and say, hey, here's what you can afford. This is your max payment based on your income and your debts. Do you want your max payment? What if you can afford $8,000 a month? Do you really want to spend that on a house? Probably not. What if you're comfortable at about $2,000 to $2,500? What kind of loan does that look like? What kind of down payment am I going to get? What are my payments going to look like month in and month out? So know your numbers, earmark, and kind of put aside what you're willing to put into this, whether it's 3% down, 3.5% on an FHA, if it's 100% financing, VA, USDA, maybe you're not bringing anything. Do you have to get seller concessions? Do you have any money that you're going to put into this so we can understand what kind of offering to prepare for you and what you're going to roll with when you get to your loan? So that's a conversation. That doesn't require a lot of information. We can do soft credit pulls. We can avoid the hard inquiry. We can do verbal on this. You don't have to jump all the way down the rabbit hole with this, but at least get an idea of what do you have to set aside and what do you have to work with when you're getting into a new loan. So I hope these tips are going to be beneficial. I hope you like this video. Please go ahead and subscribe to our channel. We put out videos at least once a week. Hopefully you like the information. We work pretty hard on it. Want to make sure that we're getting good information out to our viewers, clients, realtor partners, and everybody else. So if you need anything at all of our contact information is down below. Feel free to reach me. Go online, get a hold of us, message, call, text. We are super reachable. Okay, we're here for you. Thanks again for tuning in to Weekly Mortgage Minutes, and I'll see you again next week. Bye-bye.